My name is Tyler, guys. We are going to be talking about sundial growers today because I think at a $1.625 billion market cap, this begs the question, and you can make an argument here that sundial growers is undervalued. So we're going to be talking about it. We're going to break down an article going over why sundial growers is undervalued. So if you guys get any useful information or knowledge out of this video, make sure to hit the like button, comment down below, and subscribe to the channel. Hit the notification bell if you want to stay up to date with these videos as soon as they are posted. Now, just taking a look at the chart really quick, we can see on February 11th, we topped out at $3.96 per share. And I do want to point out, people were more than happy to buy this in between $2 and $3 a share that were actually holding it for the long term. They were able to justify the valuation. Now, I didn't believe so at those prices, but now that we have fallen about 75% from those highs, almost 75% from the highs, I do think this is a value trade at this point. It has just been beaten down so far, going from almost $4 a share to, I guess from its highs, it's down over 75%, down to 76 cents at its lowest, and we're chilling at 85 cents per share. So it does look like we are at our bottom level, and the way I would play this is the options. But I do want to get into the article now. I just want to show you guys what has basically been happening. We've just been selling off relentlessly. So I was not a fan of this at in between $2 and $3 a share, but at 85 cents, there is a strong argument here that it is undervalued just based off how much cash is on their balance sheet and how much debt they have been able to get rid of. So we're going to look at that. Article is from Investor Place, and this guy, David Modell, it posted April 14th, 2021. So this is just from 4 days ago. So we're going to look at it. Sundial growers, investors should applaud cost reduction and debt elimination. The beatdown of SNDL stock seems senseless as Sundial fires up its finances. Basically saying that nobody is a fan of the cannabis stocks right now, which we all know. And he said he was bullish on March 23rd, even went as far as to assert that critics and short sellers would regret their positions. So he's basically very, very bullish about sundial growers. But I like the facts that are in this article, so that's why I did want to make a video about it and bring it to your guys' attention. If you guys are still dabbling with this, it could have a good future going ahead. So if the stock was good at $4, it should be terrific around $1. No kidding, right? Closer look at SNDL. We all know what happens. Short squeeze. Basically saying the hype's gone. Revenue improvement. This is really where I want to hone in on this article. It says there's sometimes a misconception among investors that cannabis companies are money-losing ventures. That's an unfair assessment, and Sundial's recent reported fourth quarter 2020 fiscal data shows that there's, pardon the pun, plenty of green to be made in the legal cannabis trade. Let's break down that fiscal fourth quarter. During that time, Sundial net revenues totaled $13.9 million. That's an improvement of 8% over the third quarter, $12.9 million. Moreover, the company's gross revenues increased quarter over quarter by 10%, while Sundial's gross margins improved by a very impressive 23%. So the margins are getting better. Their profit margins, they're bringing their costs down, making it not as expensive to do day-to-day business, but they are not in. Their growth is not super high as in like a growth company. Like a tech growth company is around 20% or higher growth. They are seeing about 8% to 12 to 10%. Excuse me on that. But seeing what is really impressive though is their cartridge sales. So fourth quarter gross revenues from vape cartridge sales, that number totaled $4.3 million and represented a 19% increase from the previous quarter. So this is more on the growth side of the business, and they are a pretty decent leader in that category, just as it is already, or at least Sundial's been able to capitalize on it. On top of that, Sundial took in gross revenues of $11.9 million from dry flower sales during the fourth quarter, and that signifies a 3% increase compared to the prior quarter. Slashing debt, reducing expenditures. Considering the figures we just looked at, the revenues are important no wonder if the sell-off in SNDL stock might be overdone at this point. in quotes, we successfully restructured the entire organization by repaying all outstanding debt, improving our operation practices, targeting a sustainable cost structure, and a simplified business model. Sundial also curtailed production and reduced the size of our workforce in response to market demand. It's heartbreaking to hear about workers losing their jobs, but investors should appreciate that what Sundial is doing here. With these expenditure reduction measures, Sundial is firing up its capital position for the long term. Let's drill down on some numbers here. In 2020, the company eliminated $227 million in its aggregate principal amount of debt. Furthermore, Sundial Growers ended up with $60.4 million in unrestricted cash on hand at the end of 2020 and $719 million in unrestricted cash on hand as of March 15th, 2021. So they have a very, very sizable cash position right now. And if you guys remember, the market cap was 1.625 billion or 1.665 billion, 62 billion. That is very significant. So they almost have 50%, almost 50% of their total market cap just in cash right now. And they have already said that they paid off their aggregate principal debt, so they probably have more long-term debt, but they have paid off most of their debt, so their debt is not an issue for this company. They are in very strong financial position. And really, the cannabis industry after 2017, when it really started to ramp up for the first time, 2017, 2018, a lot of companies overshot the growth expectations, so they really bit off more than they could chew, and that's what happened to the cannabis industries. That's why they popped last time, and it was unsustainable because they thought with all the demand with legalization in Canada that these companies would see massive revenue increases, and there became too much competition, and it kind of weeded each other out. So not one company took a majority of the market share, so basically all companies lost on this cannabis venture in Canada. So that is basically, long story short, what happened in 2017, 2018. So the fact that they are getting on a sustainable course going ahead for the future is very important if you are considering investing in this company, or maybe you have already invested in this company, and this should be reassuring to hear if you did not already know this. So SNDL does look like a great buy right now, as it is down over 75% from its all-time highs, around $4 per share, currently at 85 cents a share. I do think that is a buy, especially so many people were willing to buy this gladly from $1.50 to $3 a share. This is for sure a buy. So that is what I am thinking. I would personally play the options because I'm not a big fan of owning the equity long term. This does look like a good trade if I do say so myself, but you can't go wrong with the shares, especially at this price nevertheless. So if you got anything useful out of the video, make sure to hit the like button, comment down below, and subscribe to the channel. If you want to stay up to date, hit the notification bell. Like I said in the beginning, you guys know the deal. Check out the links in the description. I'm going to get out of here. I will see you guys in the Discord and in the comment section. Peace out.